This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil rose 1% on Friday as an increasing number of oil tankers diverted course from the Red Sea following overnight air and sea strikes by the US and Britain on Houthi targets in Yemen after attacks on shipping by the Iran-backed group. Brent crude futures settled 88 cents, or 1.1%, higher at $78.29 a barrel. The session high was up over $3 to more than $80, its highest this year. U.S. West Texas Intermediate crude futures climbed 66 cents, or 0.9%, to $72.68, pairing gains after touching a 2024 high of $75.25.
The US on Friday proposed a fee on emissions of methane from big oil and gas producers as required under the 2022 climate law and as a backstop to wider regulations on the greenhouse gas from energy operations. The fee, proposed by the Environmental Protection Agency, applies to large oil and gas facilities that report methane emissions of more than 25,000 metric tons of carbon dioxide equivalent per year. As directed by the Inflation Reduction Act, IRA, the fee starts at $900 per ton in 2024, increases to $1,200 for 2025 and $1,500 for 2026 and beyond, the EPA said. It only applies to the emissions that exceed the specified levels.
Moving on to the top news in the energy sector.
U.S. power and natural gas companies were preparing on Friday for extreme cold over this Martin Luther King Day holiday weekend that is expected to cause record gas demand while also cutting supplies by freezing wells. Lower gas supplies at a period of surging demand could test power systems in hard-hit areas. Winter storms in 2021 and 2022 caused widespread damage and power outages in part because many power plants lacked sufficient fuel to operate. U.S. gas output was on track to drop by 3.7 billion cubic feet per day, BCFD, or 3.4%, over the past 5 days to a preliminary 10-week low of 104.5 BCFD on Friday, according to financial firm LSEG.
Marine fuel sales at world's leading bunkering hub in Singapore hit a record high last year, official data showed on Friday, driven by record container throughput and increased interest in biofuels. Bunker sales, including volumes of bio-blended fuels and liquefied natural gas, LNG, rose to 51.82 million metric tons, data from Singapore's Maritime and Port Authority, MPA, showed. That surpassed a previous high of 50.64 million tons in 2017. Volumes in December were the highest of any month last year at 5.05 million tons. Container throughput rose to a record 39.01 million 20-foot equivalent units, TEUs, topping 2021's previous record of 37.6 million. Next, we have the top news in metal markets. Gold prices scaled a one-week peak on Friday as an escalation in the Middle East conflict fueled safe haven buying, while softer U.S. producer price inflation boosted bets that the Federal Reserve might cut interest rates sooner. Spot gold was up 1% at $2,048.21 per ounce at 2:24 p.m. Eastern Time, 1924 GMT, after climbing as much as 1.7% earlier in the session. Bullion was mostly flat on the week, but extended its run above the $2,000 level to nearly a month. U.S. gold futures settled 1.6% higher at $2,051.60.
Copper prices slipped on Friday on a firmer dollar and loan data from the world's leading metals consumer China, but losses were cushioned by expected monetary easing in China. Benchmark copper on the London Metal Exchange, LME, was down 0.3% at $8,334 a metric ton at 1700 GMT, having retreated from a session high of $8,448. Growth in outstanding total social financing, TSF, a broad measure of credit and liquidity in China and viewed as a key gauge of metals demand, fell to 1.94 trillion yuan, $270.72 billion, from 2.45 trillion yuan in November.
We will now look at the top news in the agricultural sector.
Chicago soybean futures regained some ground on Thursday but remained near their lowest levels since December 2021 amid lackluster demand for U.S. exports and an improved supply outlook from South America. Corn futures rose but were close to their lowest since December 2020. Wheat also gained. The most active soybean contract on the Chicago Board of Trade, CBOT, SV1 was up 0.9% at $12.47 minus 1/4 a bushel by 0404 GMT after slipping to $12.34 on Tuesday. However, prices were still down nearly 4% so far this month. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.